Hello, 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 everyone. Happy Friday. How is everyone doing today? Just get everything set up here. Hopefully, the sound and the picture for those who like to be tortured by looking at my floating head. I hope it all looks good. Good morning, Patrick. Let me move this window. Good morning, Sterling. Thank you for putting in all the earnings. The market celebrating everything. I want to see how this reacts after the open, though. We had CPI numbers come out today, and the market literally, yes, it was better than expectations. But market's like going nuts over 3% core and headline 3% year over year, 0.3% for headline and 0.2%. That's anywhere from 2.4 to 3.6 annualized, depending on what metric you're looking at, which is nowhere near. Especially 3.6, 3 to 3.6 is nowhere near their 2% target. It's not even like we're at 2.2, 2. But the market, oh, I love this headline. Wall Street explodes as delayed inflation figures crush expectations. Crush? This is crushing expectations? We're just in pure, you know what? The, I don't know what to say. The markets just want to, and again, trend is still up. Don't get me wrong. Now we have the breakdown of the VIX. Now is their time because we still have the tariff ruling or the tariff trial coming up in November. I'm still looking for hedges. Going to be watching how this goes after the open. The dollar initially sold off and rebounded. So that's interesting. Good morning, Jacob. Good morning, Tony. Again, there are no shorts right now. Hello, Charles. Good morning, Ted. Good morning, Christoph. Good morning, Anissa. Yes, celebrate everything. New highs. Celebrate 3% in annual inflation. Sell volatility and buy it all. Good morning, Mark. There you go. Volatility index hits 2 ago. Just sell volatility. Back to buy it all. Back to buy it all. Goldman Sachs CPI won't deter Fed. The market's already baked in 2 rate cuts. So we're still at 3% inflation, and the market's like, hey, let's just get more rate cuts. Good morning, Odie Green. I saw that noisy housing data likely lowered September CPI. And you have still in the studies, 37% of companies are passing along the tariffs to inflation. It's not all at once. That's why I'm, you know, they're saying tariffs are only a one-time price increase. No, because again, let's say you need to pass along a price increase of 10%, but you can only do it gradually. You can't raise your whatever it is, your product from $10 to $11 in one thing. You go 10.25, 10.50, 10.75. It's not a one now. Eventually it caps out, but you have other things that keep going. So you don't know if that $11 price keeps going to $12. I disagree with a lot of the inflation rhetoric. Because it's what I started talking about last year. It's very, very sticky. I was talking about what if we get stuck around the upper twos, 3%, and we're stuck around this level, even if we dropped to 2.8? That's crushing a lot of people in this country. Good morning, Rick. By the way, Rusty over on Rumble. Thank you for tuning in on Rumble. Did I answer your question about overnight data? So that's where we sit today. But again, do not short this market unless a pattern is being triggered. I'm actually just watching. White House likely to release no release of inflation data next month. Why will they not? They released it this time because it was required to index Social Security. You have to gauge how much it's going to increase next year. So Social Security payments are going to go up 2.8%. So they had to do the calculation. Now, they don't have to do it for November. So if the shutdown continues, they don't have to do it. This was because there's no conspiracy here. This is because they had to do it to index Social Security to inflation. Remember, the fiscal year starts in October for the government, so they had to get the September print. Okay? There's no major conspiracy. Why are they doing it this month and then not next month? Again, if the government shutdown ends, it will be released. Maybe not on time, but it will be released. All right? Yeah, the cost of living adjustment. There, OD Green got it. Cost of living adjustment. So, that's why. So don't read into any conspiracies. Why are they doing it? Blah, 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 blah. That's why. Again, not everything with the government's a conspiracy. Although, if they don't release it in November, Trump will say there's no inflation. Because, hey, there's no report. There's no inflation. And if I hear again there's no inflation with inflation running 3%, even if it was running 2.5%, there is inflation. No inflation would be closer to 0%. So we have inflation. It's just people latch onto a narrative and just keep running it with it. Your tinfoil hat's on your desk? Well, there you go. Can't go wrong with a tinfoil hat. We old geezers like the cola. Well, I hope they don't switch it to Diet Cola for you, Rick. Because if they switch it to Diet Cola, you're in trouble. Fed tracker for 2027 is interesting. Predicts a rise in rates. Good morning, by the way, Daniel. All right. All right. So we had the CPI numbers. We still have the S&P manufacturing composite and services coming in 15 minutes after the cash open. Consumer sentiment coming out. These are the final numbers for October and inflation expectations. So I'm still paying also attention at 10 a.m. Eastern for potential reversals. All right. Short-term reversals, like intraday reversals. Then you got the rig counts for anything with crude. So there we go. And again, shutdown continues. So. All right. See, here we are. Let me just refresh. Here we go. Buy it all. Buy it all. Yay. Sell vol. Let's refresh this one too, because I rambled on. Only thing down is basic materials. Everything else is up. Fed watch. Let's go back to probabilities. 2, and then the third rate cut in January at a close to 57%. Yeah, there's you go. It does have a bounce in 2027. Fear and greed? Still in fear mode. How could we be in fear mode? Markets are a new we'll just cover it because it's useful for contrary stuff, but how is it in fear mode? With markets at all-time highs. Now the breadth is still deteriorating. Schiller PE 40.24. Thank you again, Sterling. With Intel, with PG, a lot of stuff was a beat. Again, these are very dumbed down earnings. It's just like, hey, instead of 0.4 projected, we hit 0.3. We'll celebrate that because obviously that's no inflation. Okay, whatever. Here you go. I'm really watching. This was a lot of algos going off. Algos going off with just reading the headlines. Oh, look, it was better. It was better. So, going to be watching today how it closes in relationship to roughly about 6,800. The double, the weekly double, is still in place unless we get above 6,880. The rotation zone's still holding. Very major support, 67.75, roughly. Uh, so really, I mean, there might be some intraday price action, like if at 10 a.m., or I'm looking for some potential selling because of the overreaction to the algos, but that's could be only short lived. Yeah, it's a Friday. Cautious on a Friday. Other than that, next, if we continue to bounce up after this little pullback, let's take a look at the shorter term chart. After the little spike, the little pause here, if we do pull back, the key area I'll be watching is 68.80 to about 68.90 for a short-term support today. If we just rally up from here on the open, 68.46 to 68.50 is my target. Need to check in on OKLO and IonQ because they are two public companies that were selected by the DOE for the reactor pilot program. All right. Remind me. Let's just get through this. Again, trend is still up. The first key level of support is just above 25,300, about 25,340, 25,350. Okay. 25,548. We're just in shy of that target. If it does plow through there, it would take off the weekly potential double top if we get above, what's the exact number? What's the exact 25,70 something, 709. So the key minor support I'll be looking at the open is if we 25,400 is a major support actually going in the open. Nothing different with that. The Dow, we do have a, why is this valid? Because it's valid on the if you look at the daily, you got to check your time frames. Yes, the second and third target go through this tail, but it's still valid on the 4-hour time frame. You see here, this is a completely valid potential double top, and it's reversing this move. So the only thing that would put me in major bearish, or not even major bearish, minor bearish mode would be a close below 46,600. Other than that, I'd be still watching for pullback buy opportunities into that. And also interesting enough is even though it's not a valid double on the daily, it would be below the daily rotation zone. Other than that, here we go. The invalidation point is 47,518. And that also forms a very key cluster should the Dow break out to new highs. The good old Russell breaking above the key resistance level today. Coming back up there again, back and back down. So a target intraday is about 25.36 again. Then you have about 25.48. So that's about it. If it were to break to new highs, we are still off 25.82s and 2600. The support level is right about 25.17. Gonna bump that down just a hair into this about 25.15. You're watching for a potential reversal. VIX also yesterday breaking below 18. Giving us a little precursor looking at this morning with volatility breaking down ahead of the CPI. Coming into a very support base. So again, I'm going to be looking because we're not out of the woods yet. The market's just in complete rah-rah mode. That's why I'm still going to be looking for at least some hedges through November option expiration. DAX, nothing to talk about. Still caught in consolidation. This is also interesting, a spike up in the notes and now moving down after confirming but not triggering the double. So the double is potentially confirmed but not triggered. So the double could trigger any time over the next few days. The yields, again, not triggering on the yields, not pulling back far enough to invalidate it. No, it'll bounce. Again, these are both against the rotation zones that are lower probability kind. Crude, pausing at a very key area. Cycle's getting top, overbought. I'm going to, from a trailing perspective, today's low, especially if we don't take out today's low, today, said today a lot. I will be looking at this for Sunday night, Monday morning for a trailing stop for this trailing from the double bottom that just kept going. All right. That's the trailing level is possibly today's low, as long as that low holds today. Because why? It's a percent B sell with cycles getting to the top and overbought. Does that mean it's a short? Not at this point. It means it's a take profit long. There's now some key support levels coming in. There's some key support levels coming in that we'll be watching for. So again, it could travel back here. It's moved back in, and you see here also did not point this out this week, and it definitely looks like it's going to close. But the last week's weekly high, this is why you have to learn the rules for yourselves. Please, if you're trying to learn some of this, what was this last week? It was a potential percent B buy on the break above last week's high. So any positions. It's another reason why it was a continued hold unless it did not follow through. So even if we do a short-term stop for this on any pullback, still going to be watching for new potential re-entry buy patterns. What else do we have? Not much to talk about with natty gas. Gold. Okay. 4-hour gold. We're in triple bottom territory. However, let me reiterate something. However, still, this is why this rotation zone, see this with that, I'm just pulling off the double top at this point because now if you break below the rotation zone, I will make a target down to about 39.75 based off the this clear path move. But the 4 hours it doubled, but what did this set up? You see this right here? This set up a new potential daily double. So if it breaks above 41.71.5 and follows through on a daily close, then it's a daily double. So you should have bought and held Rude all week. You mean Crude, but I get that. You should have held the Rude. So keep an eye on that. Silver. Let's take a look. Silver, 75% harmonic. If you can't see it, let me change the color. There you go. There's your 75% harmonic. So silver also potent. These may not trigger, but for you silver bulls, this does not mean it would go to new highs either. Look about this. Look in silver. Right up between the 50 and 62.5 as the final target. First target roughly being a key breakdown level. So cycles at the bottom. So this could be a nice pattern for next week. What would require, again, this is a study in doubles. Now, if this moved up, triggered, and then closed, went through all the targets and closed above 51.16, what would I do? What would I do? That would trigger me to hold at least a partial position for the next two target levels of trailing at 52.03 and a target of 52.89. Copper at the upper end of the key resistance range. Still, look at that rotation zone. No daily close below the rotation zone. Platinum does not have a double. Dollar index. Look at this. Look at this. This double, by the way, was not valid anymore because the price action before that turned it into a triple. I just wanted to show. Look at this. You had, this was the move. You tell me the breakdown with, oh, better than expected CPI, only 50% higher than the Fed target. But look at this. Look at the buying coming back in the dollar. Dollar's not buying it, and there's overall buying pressure in the dollar. Still going to see if this forms double top territory from a key reversal perspective, but that was a very interesting move in the dollar if you did not spot it. It's still in long mode from the percent B buy. Now, if this were to reverse today and close back down here, it would not be, I would not be maintaining it buying that percent B. No more. The euro, this, interesting enough, did not invalidate the double, but you had to be really nimble, and it's turned into a channeling double. So on any stops, this would be aggressive. Aggressive stops from my perspective at this point. First and second targets hit. What else do we have? We have the yen continuing to climb, checking off the 87.5. Is this a double? No, it's not. Should say, is it a potential double? No, it's not. Because it doesn't work. You see this? It does not work on any time frame. So I'd be watching for long yen, and this is the spot. It would be short in the futures. I'd be looking at the rotation zone. By the way, Rusty, I responded to your email. Did that make sense on how to trade the futures versus spot? Spiders? Spidey sense. Let's see. What are the key levels? We had the 6. We're opening up above this key cluster. The invalidation point. Let's see what the invalidation point is for the double. Let's see what the invalidation point is above 679.22. The next major cluster is 676.71. We're opening at 676.46. All right. The very key support is this key close area right around 673, 673.11. Let me get to some other stuff. There's invalidation point for the potential weekly double, or actually daily double, also in the Qs, is above 619.21. The next harmonic target is going to open 616.20, right where we're going to open. Key support for me is now back at 611.50 area. The major next cluster is 619.21 to 619.89. Bitcoin, not much just yet. Trying to hold above key resistance right now. If we start taking out this 112 area, that could be a very scalpy. But in order for me to maintain something longer than a scalp, it's got to start closing above the 50 again. Now, there's your Bitcoin dark screen. What else? Let's see. We had a couple things in here. What did you want to look at? I know it was... Could you put it back in what you wanted to look at? Sterling. Sorry about that. Soybean meal. Not something I look at all the time. But yes, it has been in a trend. Very overbought. Cycles at the top would look again. On any pullback, this would not be a short. It could be a potential percent B trailing sell. Key support coming in at 288, 289 area. It seems to be trending. Yeah, it's definitely trending. In the short term, in the bigger picture, you're still in a downward trend. You have major resistance overhead. So that's why I'd be trailing. Again, this is still in a downward trend. It could be interesting on a potential pullback out of overbought for another bounce. But live cattle is near all-time high. They are inverse markets according to market correlation. Live cattle, which you see I haven't looked at in a while. But you can see why there we go. You can see how you keep doing let's see where the next minor key levels are if this continues up. This is not, live cattle is not, but this is why beef prices are insanely high. So, there you go. OKLO and INQ. All right. Finally, the return to the rotation zone. Looks like we could be setting up a head and shoulders top. Might never trigger. Back to the 50 and back to the weekly rotation zone. For me, today's technically a percent B buy. It's got to follow through, though, with a close above yesterday's high. Very major resistance at 142.22. If this were to break down, I'd be very careful with longs. So, this is not a head and shoulders. Actually, this broke down below key resistance. It's going to be interesting right here. Hitting the bottom of the rotation zone, rotating this. This could be setting up, though. This is another thing to watch for next week. If IonQ, again, these are highly speculative. There is no P to E because they do not make money. Watch, unless it's invalidated today, watch next week's high. If you're bullish on IonQ, could be setting up for a weekly percent B buy. That would need a break of this week's high, then follow through with a weekly close above this week's high. Otherwise, it's not a hold. I just want to go back to OKLO. OKLO does not have any weekly setup. What was the tick? What was the tick? Tick pop, no surprise there because it's buy everything open green. So that's where we sit. That's where we sit. Going to really be paying attention to the 10 a.m. Eastern time frame. You see this pop up from the print, which it did not crush in expectations. It beat, trumped up expectations, but, and again, that had nothing to do with Trump, the president. But still, we're in bullish mode. I'm being very cautious today until at least after 10 a.m. So that's where we sit. Dark Screen says Bitcoin is bad for day trading. A lot of day trading is bad for people. Oh, you got your Pequod's pizza. All right, Sterling. Good. I'm actually getting I'm getting a local Lou Malnati's for tomorrow. I'm keeping my Pequods to closer to the holidays, but I'm getting a Lou Malnati's, the Lou vegetarian pizza, getting that for tomorrow. So that's going to be my weekend. I'm saving some to reheat on Halloween. I got a large, and it's just for me because the wife's in Chicago. So I'm going to save, eat. Again, I like to eat some, then freeze it, and then I'm going to save some and heat it up next Friday for Halloween. So I don't have to leave on Halloween. All right. That's a whole week off, though. Until then, market's still in bullish mode based off the daily patterns, even if we were to pull back today. Really pay attention to where it closes, though, today in relationship to the prior all-time close highs from back on October 8th, should it pull back. Which, did you get the butter crust or not, Patrick? You always got to make sure you get the butter crust. So all of the pizzas don't come with the butter crust. Even on the ones that don't, make sure you specify get the butter crust. But thank you for that feedback. With that, I shall talk to everyone next week. Have a wonderful, wonderful trading day. Bye for now.